All right. So net profit, right, attributable to shareholders, right, divided by number of shares. So that's what you write, right? This one does not multiply by 100, so you don't need to put information there, right? And then you put your what? You put your numbers now. You go and check what was the net profit that was attributable to what? To shareholders. If you check there, you have it. Profit after tax, which is 420. So you can write here 420. Right? 420 divided by the number of shares. How many shares does this company have? You are told here that the authorized share capital is 1,000 ordinary shares, of which only 600,000 have been issued. So you use 600,000, the issued shares. So there's a difference between authorized share capital and issued share capital. Authorized simply means according to the law, this is the maximum you can issue. Then issued share capital, these are the actual shares that existed at the company, right? So if you divide the 420 divided by 600,000, you're going to get 0.7. So you can then say here, so these are runs, 0.70 runs. So that's your what? That's your earnings per what? Per share. That's your earnings per each share, right? And then you go to the next what? To the next R ratio. The next ratio says here, the measure of a company's ability to pay its short-term obligations within 1 year only using the most liquid assets. So this word here, the most liquid assets, is the very important word there. The most liquid assets is the very, very important word there. Most liquid assets. Because under liquidity, short-term obligations, remember there are two ratios. You've got your current ratio and you've got your quick ratio. So the current ratio, it measures all of the what? All of the assets, the current assets. Whereas the quick ratio only looks at the most liquid assets. So you can come over here and then you indicate, so this is the quick ratio or acid test ratio. Some call it acid test, quick ratio or acid test ratio. And then you put the formula. It's what? Current assets, right? Minus inventory, less divided by what? By the current liabilities. Right? And then you look for the figures within the what? Within the question paper, right? So for example here, where are your current assets? You've got your current assets figure there. Two, 456,000 minus your current your inventory figure. It says here, where is inventory? Of the current assets over here, you've got 1.2, which way are inventories. So you can come over here, you subtract 1.2, right, divided by the current liabilities, which is 636. And then you calculate and you get your what? You get your answer for that, right? So that's essentially what you would be what? That's essentially how you would be completing the solutions. Then once you are done with your ratios, once you are done with your calculation of ratio, you go through all of the different ratios. You name the ratio, you put the formula, you put the figures. You name the ratio, you put the formula, you put the figures. Right? Once you're done with the ratios, you can see over here, question 2.2. It says here, comment on the following ratios that have been calculated for 2022 and 2021. Now, this is now theory now. So you now need to understand what each ratio means. So current ratio, you've got two current ratios over there. So under your comments of the ratios, you can then say what? My current ratio over there, you can see that it increased From 2021, it was 3.67. 2022, it was 3.86. So you can then write current ratio what? Current ratio increased, right? During the period under review. It's just language. You can write it a different way. Under review, right? So that's my first thing. That's what I noticed first, that the current ratio increased. But what is an increase in a current ratio, right? Then I can say this means that there was an improvement in liquidity at the company, right? This is an improvement in what? In liquidity, right? So I might actually be done like this, but if I want to go further, right, I can then, what do we normally expect the current ratio to be? So we normally expect the current ratio to be 2 to what? 2 to 1, right? So 2 to 1 is the what? Is the normal current ratio. So if it is the normal current ratio, I can therefore conclude that this one, therefore, is a bit too high. And the company should what? Should find more profitable ways of investing its excess what? Its excess cash. So I can indicate that in my what? In my comment. But you can see the reason why he's giving you these little spaces is it's just an indication of what he's expecting. He's not expecting a 20-page essay, right? He's expecting you to just provide 2 simple points, 2 straightforward points, 2 straightforward points. That is why he's given you what? Those 2 lines, so that you don't overcomplicate what you're trying to present to him, right? You go to the next one, which is the data collection over here. Data collection, you've got 35 days, and now it's 27 days. So you can comment here, and you can say what? The ratio decreased for the period. Right? That's your first comment. It decreased. What does a decrease in data collection mean? It means that we collected our debts faster, right? So this means our clients paid off their what? Their owings at a faster rate, right? And then you can go further and highlight whether this is good for the company, whether this is bad for the company, if there's anything that the company can watch. So then you highlight, okay, so if the clients are paying their debts faster, this is good for us, right? So we can check the collection period against the what? The credit terms, right? If below credit terms, then the company is okay, right? So if they are below the credit, if the credit terms say 30 days to pay, and the clients are now paying in 27 days, then there's been a significant improvement, right, for the company. Then everything is what? Is fine, right? You go to the next ratio, return on equity. You can see return on equity there, it was 14%, now it's 9%, right? So there was a what? A decline, right? Right? Showing what? The company performance is now worse off. Right. So that's our comment. It declined, showing that the company's performance is now worse off. We can comment further and say that the company should probably increase its sales. The company should cut its costs in order to improve this specific ratio. That's something that you can what? That you can add. You go to the next one, return on assets. Again, you look at it, you can see the trend was going down. You go to the next one, debt to assets ratio. You can see again, the trend was what? The debt to assets ratio actually increased. But an increase in the debt to asset ratio means that there was an increase in debtors or increase in borrowings by the company. This can actually be negative because it reflects that the company probably ran out of money at a certain point in time and had to borrow money for it to what? To sustain its operations. So this is exactly how you would tackle a question for ratios. Are there any questions on ratios?
No questions, James. Please proceed.
All right, sharp. Right. So I'm still just showing you guys, this is not your paper. Remember, like I said, this is a postgrad paper. I was just wanting to show you how your exam will actually look like and how you'll be answering it, right? So let's see what else is in here that might actually match to what you guys do. Okay, we did cash budgeting, right? So this is cash budgeting. Okay, let me show you. All right, let's see, where was the question for cash budgeting? Cash budgeting question was you guys also do cash budgeting, so it might be relevant. So cash budgeting question will come something like this, right? This is an example of a cash budgeting question. Usually you get asked two things under cash budgeting. You prepare the data collection schedule and then prepare a cash budget. Those are the two things that are usually asked under a cash budgeting, right? And then the template will come something like this. For the template for the cash budget, for the data collection, it will have a credit sales column, it will have a monthly column, and then it will have a blank column where you're supposed to put your narration, right? For the cash budget, it will have a column for the narrations, it will have a column for the workings, and then it will have a column for the month, for the respective month. And then you are just supposed to fill in the details within those within those columns. So you actually get an answer sheet where you are just supposed to complete the details within the answer sheet, right? So let's attempt this one. Let's see how it goes. All right. So it says here, using the below, prepare the following for August and September 2023. That was the question that they got, right? And it says here, I hope you guys can see this. Too small. That's better. All right. So the first thing that we need to prepare is the data collection schedule, right? And then it says here, you're given some details, right? So when you're preparing your data collection schedule, the first thing that you need to look at is which months have you been provided with for sales? So that's your first thing. So you can see here, we've been provided sales for July, August, and September. So this part here, this is what you are expected to fill on this part of your template, this whole part over here, right? You're expected to fill in the months. So you can come over here and say, you can say here we've got July, right? We've got August, and then we've got September. So remember, a data collection schedule is simply asking how much of the data did you collect in a specific month, right? So now we want to know what were the credit sales for July, what were the credit sales for August, what were the credit sales for September. So if we check the information, we are already given here. Point number 2, expected credit sales are as follows, which means we are already given the credit sales. Some questions will give you the total sales. Some questions will give you the cash sales. Please make sure you read correctly. Please make sure you read correctly. So because we're already given the credit sales, we don't need to hassle. We can just come and say what? 720 for July, for August, 792,123. And then for September, 871,200, right? So those are our credit sales. Now, the question now that we now have is in August, because remember, we're creating a data collection schedule. How much of the data did we collect in August? How much of the data did we collect in September? So the last one here will be the total collected, right? So in August, right, how much did we collect? In September, how much did we collect? So if we read here point number 3, point number 3 says here, credit sales usually make up 75% of total sales. Cash sales make the balance. Point number 4 says, amounts owing for credit sales are normally collected from the debtors as follows. 30% in the month in which the transaction took place, right? And then these debtors are entitled to 5% discount. Then 65% in the following month then the rest are bad debts, which means that they are not collected. So we are saying here, if you made sales in August, you collect 30% in August, less the discount, right? So I want you to think correctly here, right? So if I ask you how much was collected in August, your first thing is, what were the sales in August, right? So this is where I'm starting at. What were the sales in August? So the sales in August were what? Were 79200. Those were the sales in August, right? So I can come and say 79200, right? Those were the credit sales in August, because we're talking about credit sales, right? We're not talking about cash sales here. We want to know how many debtors were collection. So we are only looking at credit sales. So 792,000, right? Is the credit sales that were done in August. But out of that, how much did we collect in August, right? So we only collected 30%, because that's what it says, 30% in the month in which the transaction took place. So we are going to say multiplied by 0.3, and we are going to get 237,600 rand, right? So that's what? Multiplied by what? 0.3, right? But still, we are told that there is a 5% discount. There is a what? A 5% discount. So what is 5%, right, of our what? Of our answer that we got here? So 237,600 multiplied by 5%. That gives us what? 11,880, right? So that's a discount that they were given, which means they did not pay this amount. So we subtract it from our total there. And then we end up with what? With 2,257.20. That's the amount that we end up with. That's the amount that we are supposed to write here. Right?
Sorry, James.
Can
I just check the relevancy of number 3? The credit sales usually make up 75% of total sales. How does it relate to number 2? Because we took the whole balance on number 2 as credit sales. But now when you read that statement further, it says cash sales make up the balance. So if we took that entire amount as the 100%, how does it relate to that 75%? Where are we going to get our cash sales?
Our cash sales are currently not relevant for the question that we are doing, because we are doing a data's collection schedule. When you're doing data's collection schedule, you are not looking at cash sales. You are only looking at credit sales. So point number 2 says our expected credit sales were as follows, which means we are already given the credit sales. So we do not have to worry about point number 3, because we already have the credit sales in line. But when we do question 4.2, which is the cash budget, we are now going to need the cash sales. I will show you how you are going to calculate them when we get to that question. Understood?
Noted. Thank you.
All right, sharp. Okay, so that's 2,257.20. So 2,257.20, right? So that's the 30%, right? But it says yes, 65% is collected in the next month, right? So this means that I can therefore say what? 792,000 multiplied by 0.65 to get the amount that is collected in the next month, right? 792,000, which is 514,800. But this is collected in September. So I can then come over here under August and say here 514,800 was collected in what? In September. right? So now I'm done with that with that month. Now let me go back to July. I didn't want to start with July because I didn't want to confuse you. Let me go back to July now. So now if we go back to July, right? We say that in July we made sales of 720,000, right? 30% of that was collected in July. But our question over here, the question that we are doing, it says you prepare a data collection schedule for August and September only. So that's why we don't have a column here, which is separate. We only see we have column for August, we have column for September. We don't have a column for July. That's the reason why it's not there, because they didn't ask for it, right? But still, although they didn't ask for July, we also know that some of the sales that were made in July will only be collected in August. And what is that? That is the 65%, which is collected the following month. So the sales that were made in July, which is 720,000 credit sales, multiplied by 65%, gives us a figure that is the amount that is going to be collected in August, but it is for the sales that were done in July, which means we have some cash that we are receiving in August over here for sales that were done in what? In July. So we record them there. Then we go to the last one here, which is September, right? So for the sales of September, we are going to get 30% in September, and we're going to get what? 65% in what? In October. But again, we don't have a column for October. So we are not interested in what? In October, we're only interested in September. So we're gonna say 30% multiplied by 871,200, right? Which gives us 261,360. And then we are going to remove our what? Our 5%. And then we end up with our answer there, which is 248,292. Right? And then we add our totals, right? We add everything for August, which is 468,000 plus 225720, which gives us here our total 693,720. Okay, what happened? Okay, like that, sorry. 693,720. 720. And then we add for September there, which is 514,800 plus 292. Sorry, that's not 292, that's 248,292. And that gives us 763,092, right, as our total there collected, right? So once we've done that, we have completed the data collection schedule. So we get all of our 4 marks from the things that we've done over there. Is it clear? Are the questions on the data collection schedule before I go to the cash budget?
Yes, it is.
James,
Yes.
please can we go back to the amount for July? How did you get 468? Your screen was not showing on how you're doing your calculations, and the one for September. Thank
For
you.
July, it's 720, right? Multiplied by 65%. That's where you get this one for July. Because remember, July, we collect 30% in July and we collect 65% in August. So the reason why we are recording this year is the 65% that we collect in August. Is that clear? Hello, is that clear?
It is clear, thank you.
Okay.
The one for September, the 248,292.
It's 871,200 multiplied by 30%, right? And then minus the 5%, because remember there's the 5% there, right? So our answer that we get initial, which is 871,200 multiplied by 30%, which is 261,360. We multiply that by 5%, right? And then we subtract. And then we end up with 248,292.
Thank you.
All right. Sure.
Hi, James.
Uh-huh.
In a case whereby we're like 4.2,
Mm-hmm.
it says 65% in the following month.
Mhm.
If we're not given 65%, we're going to do it with 30% and 5% discount for the whole month.
No, you're given. You're always given.
Yes, but it says 65 in the following month,
Mhm.
which is the following month, which is August. So it was for August, we calculated, we used 65%. If we didn't have 65%, we're going to use 30%.
I'm not really understanding your question, sorry.
For July, you calculated with 30%,
Uh-huh.
but for August, you said 65%.
We are just following the instructions here. For each month,
Yes.
you are in July, right? If you are looking at the
I
sales for
understand
July,
you. I
right?
just want to find out if we were not given 65% on the 4.2, what percentage were we gonna use? The 30% one.
No, you are always given. That's what I'm saying. You are
Oh.
always given. There is no question where you are not given that percentage. It's
Okay,
always there.
noted.
Mhm. It's always there. It's part of the information that you, in certain questions, you even get a 4.3. They will tell you 30, maybe 40% in the following month, and then they'll tell you maybe 25% after 2 months. You just follow the whatever the question says, but you're always given the information. All right. Now, so we go now to cash budget, right? So cash budget, you've got two things. You've got the cash receipts and you've got the cash payments. So under cash receipts, the first thing that you do is you put the datas collected. So you put datas, datas collected, right? So you put the datas collected and then you put the cash collected. Right? So under the datas collected, you are simply taking information from your datas collected schedule, right? So in August, we collected 6937.20. So you just come over here and put 6937.20, right? And then in September, we collected 763,092. So you come over here, 763,092. Right. So those are the data that were collected. Now you need to calculate what was the cash sales or cash collected during those those specific months. Now this one is where now our friend was asking about. That is now point number 3, right? Which is 75% of total sales are credit, but the balance is made up of what? Of cash sales. So this is now ratios. The things that you guys were doing when you were doing your grade 12. All right. So ratios, according to ratios, we are saying that if 75% is equals to 792, right? This is for August, right? What is 100%? And we put a question mark there, right? So that's what we're asking ourselves. And then what is 25%? Because remember, we want cash sales. That's what we're asking ourselves. We are being told that in August, we made credit sales of 792,000, right? Those are the credit sales that we made. But this 792,000 is only 75%, which means that there is an additional 25%, which was what? Which was cash sales. That's what we need to calculate. So what you simply do, right? What you simply do is you take the 792,000 and you divide it by 75%, which is 0.75. If you do that, you are going to get the total sales. Right? So if I say 792,000 divided by 0.75, I get 1,056,000. So these are my total sales. Now, because I have total sales, I can now calculate 25% of it, which is the cash sales. So I can now multiply by 0.25 and then I get my final answer, which is what? Which is 264,000. Is it clear how I got the answer there?
No, James, I didn't get that.
Yes.
Sorry.
All right.
Yes, it's clear.
All right, I'll
Oh.
repeat. I hear someone saying no. I'll repeat again.
No.
So we said that we have 792,000, and this only accounts of 75% of our sales. Are we in agreement there?
Yes.
Right?
Yes.
So we want to know what is our total sales figure, right? So in essence, we are saying that if 75% of total sales is equals to, all right, let's do an equation for those of you that like equations. So we are saying here 75% multiplied by total sales is equals to 792,000. That's what we are saying over there. So calculate total sales. According to mathematicians, what do? We divide both sides by 75%. Right? So it becomes total sales is equals to 792,000 divided by 75%. And how do you write 75% in decimals? You write it as 0.75. So if you put that in a calculator, 792,000 divided by 0.75, you're going to get an answer of 1056000. These are your total sales. Are we in agreement?
Yes.
Nalo?
Yes, James.
All right, sharp. So if we're in agreement that those are our total sales, 1056000, then the question is, how much are cash sales at this company? Right? And we are told here 75% of total sales are on credit, but the balance is cash sales. So 100% minus 75% gives us what? Gives us 25%. Are we agreeing that our cash sales should be 25%?
Yes.
Yes.
Yes. So then we multiply our total sales, multiply by 25%. And then we get our what? Our answer, which we said is what? 264,000. So that's how we got that answer for the cash collected. Right? So we want to do the same thing for September. We want to do the same thing for September. So again, same concept. We are saying here 871,200 is equals to 75%. Right? That's what we are saying. In essence, according to mathematics, we are saying if we said total sales multiplied by 75%, we got 871,200. So solve for total sales. So we divide both sides by what? By 75%. Right? Which means total sales is going to be equals to what? 1,161,600. And then we want 25% of that. So 161,600 multiplied by 25% is equals to 290,400. Right? And then we indicate that as our what? Is our what? Is our sales for September. Are we together?
Yes.
Okay. So sales for September, 290,400. All right. So we can also now go through all of these comments here, all of this information to see if there is any other cash receipts or any other money that the company received. If you go to point number 5 is talking about purchases. So this is not money that was received. Point number 6 is talking about salaries. So this is not money that was received. Point number 7 is talking about interest on a loan. So this is not money that was what? That was received, right? Point number 8 is talking about, let's see. Okay, this is received. Part of the building is sublet to a tenant and rent receivable, which means we are receiving some rent from a particular tenant, right? Rent receivable on the last day of each month. The lease agreement for the year ended 31 August 2023 reflected a rental of 230,400 per annum. So this is the rent that was being paid per year, right? This one per year for the year up to 2023 August, right? But from September, the rent is changed to this amount there. And again, this is for per annum, right? And remember, we are doing here a cash budget for months. So for you to get to know what was the rent for August, you need to know what was the total amount per year. So we are told here up to August, they paid 230,400 for the full year. So we divide it by 12 and we put our answer what? We put our answer there, right? We look for September. We are told here from September to next year, they're going to pay 254,400. So we also divide it by 12 and we put our answer under what? Under September, right? So I'm going to do the calculation. Is it clear how we are going to go there? Divided by 12. So this one is 19,200. Then the other one, 254,400 divided by 12 is 21,200. So those are our answers there, right? 19,200 and 21,200. 19,200 and 21,200. So this is rent receivable. Okay. So those are our cash. I don't think there's any other cash payment, cash receipts, right? So we can then add here for us to get our total, right? So we can even say here total receipts. And then add all of our totals together there, right? Which is what? 693,720 plus 264,000 plus 19,200. And then we get here 976,920. And then for the other one, it's 763,090 plus 290,400 plus 21,200. And then we get here 1,074,692. So those are our total receipts. Now we go to the payments. So under payments, we are going to have credit purchases. We are going to have cash purchases. We are going to have some salaries, etc. Let's go through it together. All right, let's see. So the monthly salaries, sorry, where was I? Purchases. Okay. The budgeted purchases for July 2023 were 480,000, right? So we have what? 480 purchases in July, right? Inventory purchases thereafter increase by the same percent as increase in sales. So this is called the percentage of sales method, right? 50% of the purchases is for cash, and the balance is paid in the month after the purchase, right? So this means that this amount here, this 480 in July, half of it was paid in July, half of it will be paid in August. So we might as well multiply this by what? By 0.5 and put it under credit purchases for August. Because it was paid in August, it was not paid in July, right? Because remember, half of it cash was paid in July, half of it a credit was paid in August. So 0.5 multiplied by 480, it gives us 240. So 240 here. Okay. Where was I? All right. So I want to focus on this statement here, the percentage of sales method, right? Which says inventory purchases thereafter increase by the same percentage as the percentage increase in what? By the same percentage as the percentage increase in sales, right? So what we can now do there is we can either calculate the percentage increase in sales and apply it thereafter, right? We can either calculate the percentage increase in sales and apply it thereafter, but that is a very, very long method. That, honestly speaking, that is a long method. The faster method, right, is this simply means that the ratio will be the same, right? If they increase by the same percentage as sales, it means that the ratio will be maintained. So what is the ratio of sales and purchases? So the ratio of sales and purchases, we are saying that 480. We're saying 480 is our purchases in July, whereas 720 is our what? Is our sales in July. So this means that the ratio is 0.6667 and etc. So if we use this ratio, we can simply multiply it by the August sales. We can simply multiply it by the September sales for us to know the purchases for those respective months, because the ratio is going to be the same, because purchases are increasing at the same rate as what? As the sales. So we can just say now multiply that by 72000, right? So we want to calculate for August. What were the purchases for August? So we are now saying here 792,000 multiplied by that ratio that we what? That we got, right? And then we are going to get our answer of 528,000. So these are now the what? The purchases for August. And remember what we said, 50% are in cash and 50% are in credit, which means of the 528 purchases in August, 528 multiplied by 0.5, which gives us 264. So under cash purchases here, we can say 264 were purchased in August. But the other 50% was going to be paid in September because that's credit. So we can come and record it here. 264. Oh, sorry. What am I doing here? It's under credit, right? 264 under credit. Are we together here? Are we together?
Not really, James. I can't say we following. Can you repeat it again?
No.
Especially the 50% part.
All right, it's fine. Okay, so we are saying here we have got sales for August, which is 400, sales for July, which is 480,000. The purchases, right? And then we have got sales for July, which is 720,000. So if I was to ask you, what is the percentage of purchases that is found in the sales? You can say 480, right? Divided by 720, right? Multiplied by 100 in essence, right? And you're going to get 480 divided by 720 multiplied by 100, and you're going to get 66.67%. Is it clear how I calculated this ratio?
Yes, it's
Right.
clear.
So we are saying that for every dollar in sales that we are making, 66.67% is purchases. Are we together there?
Yes.
Yes. And then it says that they increased by the same rate. That's what it says here. Increases by the same percentage, which means that as sales increase, as they change from July to August, purchases also increase by the same rate. Therefore, this means that this 66.67% is going to be
Will
maintained
apply.
in August and September. Are we together there?
Okay. Yes.
Yes. So if they are going to be maintained in September and October, then we don't need to hustle. We can just take this 67% and multiply it here. Multiply here 66.7%, and then we get the August purchases. Multiply here, multiply by 66.7%, and then we get the September purchases. Are we together there?
Yes. Yes, James.
Yes. So once we get the August and the September purchases, then we can come to this statement here. Is it clear?
Yes.
Yes.
I
So
get
that's what we
now.
are simply doing here. So we are simply taking, right?
Yes.
792,000 multiplied by 66.67%. And we're taking here 871,200
200.
multiplied by 66.67%. Right, for us to get the purchases for the respective month before we see which were cash and which were what, which were not cash. Right, so 792,000 multiplied by, right, and then we get what?
Yes.
528. This is for August, and then we go to September. 871,200 multiplied by,
6.6.
and then we get 580,800. So these are our purchases. Now, which read now this statement, what does this statement tell us? It tells us 50% of our purchases are in cash and 50% are for credit, and the credit is paid the following month, which means that if in August our sales are 528, right, 1,000, 50% of that, right, is in cash, which means 50% should be recorded under cash purchases for August, right? And then another 50% is in credit, which means it should be recorded under September credit purchases. Are we together there?
Yes.
All right.
We are together, James, but I just wanted to check something with you.
Mm-hmm.
Because I was listening the recording from the
Mm-hmm.
our lecture.
Mm-hmm.
Under purchasing,
Mm-hmm.
he did not do anything. He just recorded the amount as it is without calculating it. And now here I'm seeing you are, I'm seeing here that we were given 50%. So in a situation where maybe there's no any percentage, do we have to record it as it is like the lecture did, or maybe there's
No, you record it as it is. You record it because remember, each
There's no
question,
percentage.
each question that you're going to get will be different, right? That's what I was saying earlier. Each question will be different. In some questions, it will tell you that all of the purchases were cash purchases, right? Which means you just record it as it is. In some questions, it will tell you all of the purchases were credit purchases, right? Which means you record it as it is. You are just recording it in a different month. So it just depends with what the question is requiring. If the question is splitting and telling you 25% is this, 75% is this, then you have to calculate. If the question is not splitting anything, then you record it as it is without splitting anything. I hope that's clear.
Okay, no, it is.
All right.
Thanks.
All right, cool. So I had 264 here, 264. So that's 264,000. And then there 264,000. And then you check for the other one, it was 580,800 multiplied by 50%. That gives you 290,400. So under cash sales for September, we have got 290,400. Then the other balance should be in October, but we don't have a column for October, so we are not worried about October, right? We go to our what? To our salaries. Monthly salaries are going to be 192,000, right? Salaries are expected to increase by 6.5% with effect from 1 September, right? So you take your figure over there, right? What is the salaries figure? It's 192. So you record it as it is because it's not split by anyone. So you just record it 192,000, right? But the question says there in September, you cannot record 192. What does it tell us? It tells us it increases by 6.5%, right? So 192,000 multiplied by 1,065, that gives us 204, right? We get 204,480, right? From that increase that we got of what? Of 6.5%. Then we go to the next one. The next one is the interest, right? Interest at 18% per annum on the loan balance is payable monthly. So there is an interest that is payable monthly of 18% per what? Per annum. And then the loan balance is projected to be 480, and a repayment of 20,000 excluding interest is made at the end of each month, right? So we are saying here, let's start with the straightforward one, repayment, loan repayment, right? We are saying each and every month you are paying 20,000 repayment. So we can come here for August, we can say 20,000. For September, we can also say 20,000, right? Then interest. Okay, so what is our interest there? The lease agreement. expires and the lease agreement for the year ended. Oh, sorry. Where am I? I think I'm lost somewhere. All right. The loan balance as at 31 July was projected to be 480, and the repayment, excluding interest, of 20,000 is made at the end of each month. Right. So what we are going to do for this one, okay, is we first of all, we want to know what is the monthly interest rate to make our lives easier. So if we're told it's 18% per annum, we divide by 12 to get the monthly interest rate. So 18 divided by 12, it gives us 1.5% per month. Are we together? Because we're going to be using this figure, 1.5% per month. Are we together here? I'm gonna assume we understand each other. All right. So 1.5% per month, right? So how do we calculate our interest? 1.5%, right, multiplied by 480. This is for August, right? Then for September, it's 1.5% multiplied by 480 minus 20,000. Because we would have paid an extra 20,000 in what? In August, right? So 0.015 multiplied by 480, that gives us 7,200, right? It's equals to here. And then we open our bracket there, minus 20,000. That gives us 6,900 there. Right?
So James,
Uh-huh.
you don't minus that 7,200 that you paid previous month.
That what?
The 7.2
It's
that
interest.
you pay in August.
It's interest.
You don't
it's not
minus.
capital. It's not part of the capital. It's interest.
Oh, okay.
It's interest. It's not part of the capital. You only subtract the capital that was repaid. You don't subtract the interest that was repaid. You subtract the capital that was repaid. It's different from mortgages. I know mortgages, when you pay mortgages, you pay including interest. But for this one, it's excluding the interest.
Oh, cool.
All right, sharp. So we're going to put our interest there. $7,200 and 6,900. Okay, and then we go to the next one. The point number 8, we've dealt with that one already. Point number 9, other operating expenses are expected to be 26,000 per month. This amount includes 4,000 in depreciation. Depreciation is a non-cash item, right? It does not involve the movement of cash, and we are currently preparing a cash budget. Therefore, we should not be talking about depreciation. So if 26,000 includes depreciation, we should remove 4,000 from the 26,000 and we get 22,000. That's what we're going to do. So we then record here other expenses, right? So this is just 26, right? Minus the 4,000, which is the what? 22,000 for August and 22,000 for September, right? Then once we are done with that, we what? We add everything under cash payments for August. We add everything under cash payments for what? For September, right? Okay, we still have a little time. All right, 240, 123 plus 264, 123 plus 192, 123 plus 20,000 plus 7,200 plus 22,000. That gives us 745,200 for August, and then for September 264,000 plus 294,290 400 plus 204,480 plus 20,000 plus 6,900 plus 22,000. That gives us 807,780. Right. So those are our total expenses, total payments. All right. So now we have got total payments and we have got what? Total receipts. So if you take your total receipts and you subtract your total payments, then you get your cash surplus or a cash shortfall, right? So if you take 976,920, which is the total cash payments for August, right? Minus 745,200, which is the total payments for August, you get 231 surplus there. 231,720. Are we together? I hope I haven't lost anyone here. All right. So the other one for September, 74,692 minus 807,780, get 266,912. So that's 266,912. Right? So that's your what? That's your cash surplus or cash shortfall. So because it is positive, it is a cash surplus. Right? So now we want to fill in the last two things there, the opening cash balance and the closing cash balance. So what is the opening cash balance for August? If we check here, we are already told, point number one, the bank balance as at 31 July is expected to be 56,000 CR. CR means credit. If it is a credit bank balance, it means it is an overdraft. Please take note. A credit bank balance means it is an overdraft, which means that the account was in the negative. That's what it means, right? So it means that at the beginning of August, we had a negative balance there, right? So we can use brackets, 56,000, right? So if we started with negative 56,000, right? And then during the month, we had a cash surplus of 231,720, right? 231,720. It means that at the end of the month, we have 175,720 in the account. We have simply added these two figures. We've added the 231, which is the surplus, and the opening balance for us to get the closing balance. Are we together? And then for September, we put in our figures. The opening balance is just the balance from the last month, which is 175,720, right? And then we add our surplus for the month, 266,912. And then we get 442,632. So then we are done with our what? With our cash budget questions. Are there any questions on the cash budget? If there are no questions, this is where I'm going to end my class for today. But just like I was saying, that's how you complete your questions. So each question, there will be a template that you will be provided by the lecturer, which you're supposed to complete. So you are completing according to that template. You're not using your own brain in terms of creating your own templates, but you're completing according to the template provided by the lecturer at the end of the day. Where he says you need to put figures here, you need to put figures there. Where he says etc., you're just following through the template that he has that he has given you. Are there any other questions for today before we dismiss each other? Right, I'll send it in the group. It's not your paper, it's a postgrad paper. It's a postgrad paper that I was doing earlier today, but it had questions that are similar to what you guys are doing. I'll send it in the group. Any other questions?
Hi, James. Please
Mhm.
send that answer script as well.
All right, sure. I'll do that.
James, I just want to check in
Mhm.
terms of depreciation.
Mhm.
Do you really record it under cash flow? Is it cash flow? Yeah, cash budget.
No, depreciation should not be recorded in a cash budget because it's a non-cash item.
Oh, okay.
So if it is mentioned, you need to remove it because it should not be recorded. It's a non-cash item. All right.
All right.
Okay. Thank you guys for coming up. We'll see each other on Thursday evening. All right. Sure. Good night.
Thank you.
All right.
Bye.
Bye-bye.
Thanks, James.
Thank you.